and welcome to the Bitfluencer podcast, where we spotlight the brightest projects in the Bitcoin ecosystem. Joining us today is Larry Lepard, a passionate advocate for sound money, who is here to break down the big picture of our financial system and how fixing the money can fix the world. Hello, welcome, Larry.
Very nice to be with you, Danny and Stefan. How are you?
I am so excited for this. Like, when I got into podcasts, I got into this for opportunities like this one. So I'm really excited to ask you some complicated economics questions and gain some insight from your experience.
Happy to do it if I can, yeah.
Well, I don't know if we should start in the deep end of the pool, because I mean, a lot of my questions really just go straight to the crux of the problem. So I think I'm just going to go into the deep end. Okay.
That's fine. That will start wherever you like.
Do this.
Okay, cool. So in economics, one of the reasons that we have inflationary currencies is because it's believed that small inflation incentivizes production. How do you see that playing out in Bitcoin?
Yeah. So, and as you know, I don't think you've had a chance to mention this. I'll mention it. So I've written a book, right, called The Big Print, which discusses everything we're going to talk about here today. And in the book, I talk about that. And one of the notions that that's wrong in economics today, and it's a long story as to how it became wrong, is the notion that we need to have inflation for the economy to be safe and to function. And you know, they pull out the boogeyman of the Great Depression and say, if we don't have a 2% rate of inflation, the economy is not going to work. And this is the typical Keynesian lie that has been told to us by the people who run the financial system and the people who run the government. And they're kind of in bed with each other in cahoots to basically benefit themselves at the expense of the rest of us who work for jobs that have a fixed wage. And that wage buys less and less every year because the cost of groceries goes up at 7 or 8% a year, and some years worse. The notion that we need an inflationary economy and an inflationary currency is just dead ass wrong. And if you actually study the history of the United States, the book talks about this. There was a great period of time when we did not have as nearly as inflationary currency as we did today. We had some periods of inflation, like the Civil War, and this was the 1800s and early 1900s, where money was generally speaking sound, and we had great economic growth. We had great real income growth, and prosperity soared, all as a result of in a deflationary environment, which kind of, lays to rest the notion that you've got to have inflation to have a healthy economy. You don't. Now, the Keynesians have told the story about how it was deflation in the Great Depression was caused by sound money, and they're wrong about that too. The book lays all this out. It's kind of a tricky story to understand because the propaganda from the other side has been quite strong in one way. And they've bought the economics profession. I mean, the Federal Reserve spends hundreds of millions of dollars per year paying academics to write papers supporting their system. And if you're an Austrian economist and you have an alternative view of the world, which I do, and most Austrian economists do, that view does not get represented properly anywhere because it's a view that's unpopular for the people in positions of power.
Well, after the First World War, when some of the European countries attempted to return to a gold standard, they had some liquidity issues and some stagnation because of the attempt to return to a gold standard. What do you think? How do you think this could play out differently for Bitcoin?
Yeah. Okay. So let's talk about how it relates to Bitcoin. So first of all, one of the big mistakes they made after the First World War is they tried to return to the gold standard at the pre-war prices, which is ridiculous. That would have been incredibly deflationary, and that's why it didn't work. And in fact, the United States, our Federal Reserve Chairman tried to help the British by creating inflation here so that the British would have backdoor inflation as well. Actually, can we take a break? I gotta let my dog out. Sorry. Okay.
So maybe I can pull up.
Can you clip that piece out? I hope. Sorry about that.
No, because we are live.
Yeah. Are we live? Yeah. Sorry about that.
Yeah.
Anyway,
but we love it.
Yeah. So, damn dog. Look, Bitcoin is different. I mean, Bitcoin is not inflationary. We all know that. In fact, it is a deflationary currency. So it aligns the currency with the natural technological trend of deflation. Getting from here to a Bitcoin standard is not going to be easy because we've got a system built on this debt and built on this constant inflation. And so there's going to be a difficult adjustment, but it's a doable adjustment, and the things will be much better once we make the change. And again, all of these issues, which are relatively complex, and none of us can foresee exactly how it will happen, but all of these issues are discussed in depth in the book. I mean, that's really the point of the book. Well, actually, that's not true. The general point of the book is to write a book that was a story, my story, and that was in common enough language that it would be interesting and understandable to anybody. And what I really wanted to do was write something, I mean, because Bitcoiners are going to like the book. That I know that. I'm not worried about that. And that's not who it's aimed at. The book is aimed at an American or a citizen of the world that knows something's wrong, knows inflation's hurting them, knows they're getting screwed, but doesn't fully understand why. And then doesn't fully understand how it's going to get better and what they can do to help make it better sooner, which is to say to get involved in Bitcoin and buy Bitcoin. So the book is really an orange pilling tool for normies, for people who and for even skeptics. I mean, I write a lot about the skepticism that's out there, and Sam Bankman-Fried and crypto and all the things that have detracted from the Bitcoin message. And I try to make it, I mean, one of the reviews on Amazon I like the best was a guy said something like, if you give this to an intelligent person, they read the whole thing, they come to the end of it, and they don't want to buy Bitcoin, I give up. It's like, it's impossible, because it comes at it from every angle of why, this monetary problem that we're suffering is going to be, it's going to be solved by Bitcoin. And, that's the thesis behind the book. And I'm going to view whether or not it's successful in terms of how widely it gets outside of the Bitcoin community. But I think it's, Max Kaiser wrote the introduction to it, or the foreword to it. And, he was very kind and said, we think it's a great tool for orange pilling people. And frankly, if we want to change the system, I mean, I had a dinner, with Jeff Booth recently, and he said something to me I thought was kind of profound. He said, look, if we could get everybody to go to Bitcoin, this existing system would just fall away very quickly. But of course, as we all know, we're still, very much a minority. But that'll change, and we can help make that change. And that, again, the purpose of the book is to accelerate that change so that my kids won't have to, be dealing with this for much longer.
In preparation for the interview, I got the book. I have it right here. I only got it yesterday, so I was only able to read like a third of the book. But I think you have a way with words. It was really fascinating. Like, your ability to describe things was really gorgeous. And also, I do think you did a great job of giving a simple language to very complicated subjects. And you portrayed them slowly in a way that was digestible and not overwhelming. So I think you did a great job.
Thank you.
And the introduction by Max is really great, because he talks about, like, this book is the equivalent to the app that tells you this is where I am, the starting point, or like, so you can orient yourself. So I think Max did a great job in terms of setting out the book.
He wrote a brilliant foreword. I'm so grateful to him for writing. He's such a smart guy. He really did a great job. Banish tedious complexity. I like that. Stefan, I like your hat. That's a cool hat.
Yeah, thanks, sir. Do you like my memes too?
Yeah.
Yeah, this is just to illustrate the simplicity of your message.
So I have a question that is like tangent to economics, which is world population. Like, where do you stand with the growth of the population? Would you prefer the growth be slow, kind of remain the same, or are you okay with the population continuing to grow?
Oh boy, that's not something I've really thought much about. I mean, I certainly don't believe in eugenics or any kind of population control. I think that, the world has obviously demonstrated a capacity to carry what we've got on it right now, and I suspect it could grow over some period of time. But again, one of the things that I make a point in the book of pointing out the difference between growth and efficiency. This is one of the other errors that the Keynesians make in terms of the way they think about things. They think that growth is good. Just if economy gets bigger, we make more stuff, that's good. And that's not really true. I mean, that's growth just, in a limited resource planet, taken to the extreme, growth becomes a problem, right? So Austrians and those who are in Bitcoin, I think in general, understand that it's not growth that's good. What's good is efficiency. Productivity and efficiency is really where human beings get better lives. That is to say, we learn how to do more with less. And so, to become more efficient, it's extremely important that you allocate the capital fairly. and in a level playing field manner, and that you don't mess with the most important price in the world. The most important price in the world is the price of capital, because that's what determines where people invest and what the returns they get are. And so when you mess with the price of capital, you get all kinds of bad behavior and stupid projects and malinvestment. And we're trying to run a modern, high-tech economy, with 12 people sitting in a room and a keyboard, just setting the price of capital. It doesn't work. I mean, I don't care. I mean, even if the Federal Reserve were benign and omniscient, which they're not, they're not great people. But even if they were good people and they were super smart, they'd screw it up, because the price of capital should be set at the balance between the savings, the amount we've saved, and the amount that what investors are willing to pay for those savings to use them. The interest rates are a price. They're the price of money over time, and that should be set in the free market. But that's not what we've got. We've got a market. We've got a system where things break and the Fed sets the interest rates at 0%, which benefits everybody who can borrow that cheaply. Notice that the three of us can't borrow at 0%. We got to pay 25% on our credit cards, right? Or when inflation's raging and they're trying to calm things down, Volcker took interest rates up to 20% and it almost bankrupted my father. So this system they've got is it's crazy. It's absolutely crazy. I think I've said in other podcasts, I mean, our grandkids are going to look at this and go, it's like, you guys were like, it was like bloodletting. You know what I mean? I mean, you're believing bloodletting is an acceptable, way of treating people medically. I mean, as they did in the Middle Ages. And so, we've just got to get out of the system and get a newer system. And the really good news is we're going to get one. It's going that way no matter what, almost irrespective of what any of us do. But since it's fun to be involved in a good project, and since I want to see it happen sooner rather than later, I figured, okay, well, I'll try and throw I'll pull on my oar, which was to write the book.
So let's talk about Bitcoin being deflationary, because the supply of Bitcoin doesn't actually decrease. So do we categorize it as deflationary because the population and the production will continue to increase, or how's that work?
That's exactly right. I mean, you're right. The supply is fixed. I mean, and it's not quite at 21, but we're getting awfully close. So for all practical purposes, we're close to the end of major supply growth. Yeah, the reason it's deflationary is that the productivity will increase and the number of people will increase. And so on a per person basis, it will continue to increase in value, and on a per unit of productivity basis.
Yeah, don't worry, she's still with us, right? Danny, are you still with us? All right.
Yeah, I don't know why since the last podcast my camera started bugging. I just have to turn it back on when it turns off.
We love rainbows, no problem.
Is there anything else you want to add?
No, that's really it.
Okay, so one of the things that the Austrian economics, I sound a little bit like the devil's advocate, but it's because if I have these doubts, I'm sure other people have these questions, and it's really
good
to give you a chance to explain why they're not true.
Yeah, go for it.
Okay. So one of the things that the Austrian economics warn regarding fixed supply or decreasing supply is hoarding behavior, limited liquidity, and that it's hard for people to go through the change in mentality where their salary is actually going to go down instead of up. So how do you see these three concerns playing out?
Those are all great concerns. By the way, Austrians didn't warn about that. The Keynesians warned about that, right? Right. So first of all, the hoarding mentality, I mean, that's the whole notion that, if your money is going up in value, you're not going to spend it. Well, no, you're just going to be more careful about what you spend on. You're not going to spend it on stupid stuff because you actually have a good alternative. I mean, the reason that people play the lottery today, and they, which is stupid, totally economically stupid, is they don't feel like they have an alternative. It's the only thing that gives them hope. Okay, so people have certain sets of human needs, and just because, look, I know my TV might be cheaper in 10 years because they're getting cheaper every year. I don't care. I want to watch TV today. I'm going to buy a TV. So the hoarding thing, that one I think you can swat away pretty easily. What were the other two that you mentioned?
Liquidity and getting used to the idea that your salary goes down. Liquidity,
right. Good points. Okay, so the liquidity, let's take that one for a minute. The liquidity will always be there. I mean, liquidity is just a function of dividing. This is like the pizza lady problem. I mean, there are 100 million sats in every coin. And so, there's plenty of liquidity. It's just at what price? And there'll be layer 2, which will very effectively allow us to make transactions for pennies a transaction. So that the liquidity is just not an issue. There's always enough liquidity at the right price. And also people that worry about, wealth distribution. Well, the earlier Bitcoiners will be very wealthy. Well, yes, they will. But guess what? They'll sell some of their coins and they'll get more fully distributed. And, over time, this will be spread out in the same way that wealth is spread out today. Okay. What was the third one again? I'm kind of sleepy today.
That it'll be hard for people to get used to the fact that their salary goes.
Decreasing wages. Yeah, decreasing wages. So that's going to be a little bit trickier. But people, it's funny. People aren't stupid, and they know. I mean, look, real estate investors aren't going to like it at all because real estate investors. I love the meme that shows the guy shooting a basket or a kid shooting a basket, and the real estate investor, the guy holding him is like inflation, and it's made investing in real estate look easy, because of all the inflation underneath it, right? But back to the wages going down, people know intrinsically if their lives are getting better or worse. And if your wage is going down, but your savings, the value of your savings are going up, and the things you're buying are cheaper, it's all about the relativity. So if the wage goes down at 2%, but everything you're buying gets cheaper at 4%, you're actually getting richer. You're able to buy more with less wage. So, but you're right, it's going to take decades and a real shift in people's thought patterns and mentality to adjust to this new monetary system. Yeah, that's it. Yeah, exactly. I love that. Thank you for bringing that up. Isn't that a great, isn't that a great meme? It's just like, yeah, real estate's been kind of a no-lose investment for years and years and years because of the inflation. But if we go, and by the way, one of the things that will happen when we go into the system that I'm describing, people won't be hanging out in real estate the way they are. You will lose. Real estate now has a monetary premium. People pay more for it than is technically, the use of it is worth. And the reason they do that is because they think it'll go up in value, right? Well, we'll return to a world where real estate is really worth just what it is, the usage of it, which is what is, you want to live there. It won't have that monetary premium in it. And that monetary premium will be over in Bitcoin, which will be trading very well and trading higher because effectively people know that they can put money there and that it'll grow in value over time. And so just there are going to be shifts that are going to take place, and it's going to be hard for people to wrap their heads around that. And there'll be people, and sadly, the people playing by the old system who don't adjust, they're going to suffer. Their economic outcomes are not going to be as good. And the people who get into Bitcoin and stay with Bitcoin and invest in Bitcoin terms and keep reinvesting in Bitcoin, they're going to, on a relative basis, they're not going to suffer. They're going to do much better. I know that on a Bitcoin standard, my life has become much, much cheaper over the years, to the point where it's eventually going to get to be silly. Where it's just like, wow, so, and that, that's an amazingly powerful concept because in my life, one of the things I've seen, I'm in my 60s, I've got friends who've made, a reasonable amount of money. Some have made small amounts, some have made large amounts, but they want to retire. Maybe their house is paid for. Most people would look at them and say, well, you've got enough money to retire. And they look at me and they say, I really don't. And the reason is I might live 30 years and I don't know what's going to happen to the value of that savings. If the price level triples, I don't have enough money to retire. Given the way that the governments are behaving, and price level tripling doesn't seem so crazy as a possibility. And the beautiful thing about Bitcoin is it returns your labor and your savings to you. And so you can almost always know that if you do hard work and you earn something, you will not have it taken away from you. And in fact, by foregoing consumption, and savings and your pool of savings is what adds to the productive capital of society that can then invest in productivity, right? Which is what's going to make the world a better place. You get paid for that. That's a really good thing. So it's really, it's just, right now, if you look at it today, savers are kind of the suckers at the table, right? You save money, you're kind of a sucker. You know what I mean?
Bitcoin in the end is just, it makes money boring again, and it makes saving great again.
It does, exactly.
It's been punished so hard, and it should be the simplest thing to do. I remember that my grandmother managed to buy a new car by selling flowers at the market, and she was just saving, little by little,
and she managed
to do that.
Well,
imagine doing that now.
There was a lot of wisdom in that generation. Don't eat your seed corn, save for a rainy day, let it compound, put it in your little passbook account, and you only got paid 3 or 4%. But, back when there was less inflation, you could still grow your wealth that way. But, that whole thought pattern, we now live in a society where it's like borrow as much as you can, do it quickly, buy assets that are going to go up even more because of inflation, like real estate, and that's how you get ahead. And so, the society we're in has rewarded financial operators. I mean, the private equity industry is a perfect example of that, and it's talked about extensively in the book. And that's just, financial operators are not making the world a better place. Engineers who actually figure out how to do something more efficiently, i.e., get more output for less input, they make the world a better place. I mean, if we, I use some examples and they're simple, but the cotton gin. I mean, Eli Whitney comes along and it used to take, all day one person could separate out 5 pounds of cotton by hand. Okay, the cotton gin comes along, they run that 50 pounds, it's 10x. It's just based on an invention and a machine, and so that's what pushes society ahead. New inventions, new machines, more efficiency, and those things are all, by the way, deflationary things, but that's good. That's very good. Inflation and investing in assets and making assets go up, that's just a big Ponzi scheme. That's a game. That's like gambling. So it's going to change. It's going to reward a whole different set of people. And that's a really good thing, in my opinion.
Yeah, on that same note, I have questions of like, what's going to happen to credit on a Bitcoin standard and to interest rates on a Bitcoin standard?
Yeah, you're very smart, Dan. You've got some great questions. I mean, in terms of going, I've thought about these things a lot. So it's not going to be credit is going to be a lot rarer, and people aren't going to want to use credit because you're going to have to pay back in harder money. So the threshold for taking a loan is going to be really high because, oh my goodness, not only do I have to pay the interest on the loan, but I've got to maybe pay back in a money that's going to be a harder, and more valuable form of money in the future. Having said that, because the money is appreciating in value, the people who have the money to loan you, i.e. the Bitcoin holders, they might be willing to give you a slightly lower interest rate because they know they're going to be paid back in Bitcoin and they know the underlying value of the Bitcoin is going to go up. But I think, it's interesting. Another perfect comparison, if you study the US in the 1800s and you study it in the 1900s, 1800s, there really weren't debt markets. There weren't credit cards. There wasn't paying on time. There was none of that stuff. Everything was pay as you go equity, and businesses that raised money. There wasn't a debt market. I mean, so if you wanted to build a railroad, I mean, it wasn't until the railroad bonds came along, but prior to that, if you wanted to build a business in the United States, you had to get equity. You had to get literal cash on the barrel equity. I mean, banks were around, but they would make some loans, but there was nothing near the kind of debt markets and debt structure that we have today. And what that did is it made people much more careful with their money. And they had equity, and it worked. They obviously benefited. It didn't work, they lost their money. So my opinion is that it will be a much less financialized, much less debt laden, much less credit driven world. But that's a good thing. That's a really good thing. And so people will invest in and support things in an equity way rather than a debt way.
Could you please double click just a second on that? Because Peter Dunworth, so the co-founder of the Bitcoin Advisor, says that the problem is not debt, it's the collateral. So let me pull up something here and you'll tell me whether you agree or not. So basically, there you go. Okay, so basically, if you see that the fiat system is based on debt, so we know that debt is huge, but the collateral is basically non-existent because it's all paper. And on the other hand, on the Bitcoin standard, debt can be as big as it can, but the collateral will always be there to support it.
Right. I mean,
so maybe debt will be okay denominated in fiat, because I think we can agree that debt denominated in Bitcoin would be absolutely like too risky and impossible to pay back.
I can't see debt markets totally disappearing. I think there will be a debt market even in Bitcoin, but consider that from the borrower's point of view, they'll have to have a really good reason, to take out a loan in Bitcoin terms, knowing that they're going to have to pay back more money on a strength basis. But the most interesting thing about that chart you're showing there that I find is just look at the relative size of the debt compared to the collateral up top. It's a debt-based system with, as you say, very little collateral at the bottom. And, on the bottom schematic, look at how broad, the Bitcoin collateral section is. And then there's a little debt on top. And that makes a lot of sense to me. I think that's the kind of world we're going to evolve into. It's just there's not going to be as much debt.
Yeah, it also shows that the fiat system just cannot possibly survive, and we know it.
Yeah, well, that's Stein's law. I mean, there's a chapter in the book called Stein's law, which basically says that the fiat system, sows the seeds of its own demise. Because if you're going to grow the debt at 8%, you're going to grow the GDP at 4%. Eventually, the gap between the two becomes a problem. Hirshhorn Capital, I've got a chart in there that shows that, in the 11 cases where that happened in the 1900s, every single one of them had a currency event in terms of either very high inflation or hyperinflation. And so right now, the United States is 125% debt to GDP. So we're pretty close to 130. It's a problem.
And despite that, a lot of people would be scared of what you're saying, because in many occasions, the debt has driven periods of growth and of invention and of development. So how do you appease all those fears that are naturally going to pop up for all these people?
Well, so, I think it's a good question. It's a good concern. But I think that, what's going to happen, the debts have helped to create some growth. And maybe it was better to be in a world where we were over-investing and even some of the projects would fail and the debts would go bad. But I would argue that, the world is what the world is. And, equity is another way to finance those same projects. And there will be more people with more equity, and they will be willing to risk it, but perhaps they'll be a bit more careful. And, I think that on balance, the debts created more malinvestment, because at the margin, the banks were willing to make loans that probably an equity investor would not have made on a project that was a little bit marginal. They were trying to do it, reaching for that last bit of yield or that last bit of income. And they knew it might not work, but they did it and were willing to do it because they knew at the end of the day the government would bail them out, right? The banks always, and that's the problem. I mean, the misallocation of capital has occurred because when the Federal Reserve got established to bail out the banks, which that was the purpose of setting up the Fed. It was collusion between the banks and the government. And the banks had a pretty good business model, create fractional reserve currency, make profits, do more, make more profits, lever up, make even more profits. That all was great. The bad news was that they got too far over their skis, and then they'd have a panic and then they'd go bankrupt. And that's what almost happened in 1907 when JP Morgan saved New York banking. And so they figured out, well, this is a problem. We don't want to have that happen again. So we'll just get the government to backstop us. So that if we make too many, that way we can be really aggressive. We can make a ton of profits. And if it doesn't work out, well, the government will protect us. They'll print the money to cover our ass, which is kind of what's been happening for 100 years, right? But think about that. That system, by its very definition, led the bank to make the marginal stupid investment that they shouldn't have made. And who paid for that? Us, because when the government bailed them out, right, that added to the inflation, and therefore your groceries are more expensive, right? So, the system is broken. It's just, once you really dive down this rabbit hole, read all the books, understand it, study it, look through my book, etc., you can see it pretty clearly. The system is just really, really broken. And again, that's why I wrote the book. Your average American is walking around and they know inflation's there and they know prices are going up. They're getting hurt and it's really painful for them. They don't really understand why. They just don't get it. You know what I mean? And so the book was my attempt to explain why. And to make them mad. I mean, there are enough examples in there of bad banker behavior that you're going to come away from it and go, gosh, this is really messed up, right? Yeah. And that's the bad news. Then the good news is, hey, guess what? We can win. We can solve this. We can get into a better world, a better system. I mean, there's a lot of hope and positivity on the other side of this, but you got to stop, feeding the old system. You got to start betting on the new one, right? So I've just summarized the book.
Yeah, there's something that I love in your way of putting things, Larry, is that it makes me think of Stéphane Hessel, who died now. He was like 95 or something. He wrote a book called Indignez-vous.
I'm sorry, say it again. I haven't heard of the book. What's the name?
Indignez-vous in French is please indignate, But please have the capacity to realize what's going on and to feel indignation inside. And this is obviously what you feel every time we listen to your podcast.
It's a strength and a weakness on my part. I mean, the times I just wish I was stupid and just kind of, living my life, right? But once you see it, you can't help but get pissed off, right?
Yeah, I mean, once you understand this, it's...
I'm with you on everything that you said. I just like to hear it. One of the reasons I am super into this is because, I mean, we live in a world with a limited supply of resources, and the way the fiat world behaves, they behave like if the amount of resources were unlimited. And I think it's one of the driving forces in the decline of our quality of life. I mean, if we destroy the earth we live in, our quality of life is going to go down the gutters.
Absolutely. I completely agree with you. I mean, fiat it's ruined the world. I mean, it's ruined food. It's ruined healthcare. It's ruined. I mean, the wars. I mean, we haven't even talked about the wars. I mean, one of the beautiful things, one of the things the book really lays out very clearly. Part of the problem behind all this is that government. Find the chart in the beginning, the inflation chart, Danny. The bursts of inflation all came around a war. Bottom line, government doesn't have enough money to pay for a war because it would have to tax you at 100%. Nobody's going to allow that. So fiat money gives the government a tool to figure out how to pay for a war. And if we take the fiat money away from the government, suddenly that tool isn't there anymore. And I'm not saying Bitcoin's going to cure war, but I think it might help a lot.
Was this the chart you were thinking of? I'm not sure we were thinking of the same chart.
I don't know. The one with the inflation. Yes, that's the one, right? It's hard to see on your screen, but the bottom line, it shows inflation. I'll summarize it. It shows inflation from 1800 to 2010 or so. And it shows that so that's really the whole history of the United States, except the last few years. And what it really shows is that inflation was pretty under control. And, for most of the time this country was around, we didn't have a lot of inflation, except, and you'll see little blips, and they all come around wars: 1812, Civil War, World War II, Korean War, Vietnam War. These were all inflationary events. So, war, which leads to government spending, which leads to deficits and debt, is a fiat thing, and it's it's allowed by fiat, and it creates inflation. If we have a system where they can't do that, where they cannot create inflation at will, which if we were on a Bitcoin standard we would have, then maybe wars become less necessary as well. It's a very interesting marriage that's happened between government and the financial sector that has benefited government and that has benefited the financial sector, but all the rest of us, we suffer. If you're a Wall Streeter, if you know how to play the game, you can get rich in the financial sector. If you're government, you can get a lot of power, you can do a lot of cool things. You get equity. I mean, you see these people go to DC, they're making a couple $100,000 a year, they end up worth multimillionaires, right? So, it's a collusion of those two groups against the rest of us.
I have a little bit of a naughty question.
Sure.
So normally in Bitcoin, we say that there's no point in paying our taxes because the taxes are not the ones that build the roads. The printing of the money builds the roads. So theoretically, are we saying that if we are in a Bitcoin financial system, we should pay taxes?
Well, yeah, my view is actually yes. I mean, so we're let's go back to the government. What's the government here for? I mean, what's the Constitution say? The government was meant to be limited in its scope, and it was meant to provide for the national defense, which I think in the world we live in today is actually becoming a much smaller and smaller issue. That I think we could get unilateral, nuclear disarmament and really cut back on all defense expenditures all around the world. Because I don't think the average citizen of the world wants to go kill other people. I just don't think they do. I think big governments want to go kill other people, but I don't think citizens. So if you take out all the war expenditures, that helps a lot. You get a nice dividend there from that. Then go to taking out all the a lot of the stuff that the government shouldn't, in my opinion, be involved with, which is all the all the entitlements and everything else. But they're there for whatever. Let's just leave them aside for now. I mean, to my way of seeing it, what government is supposed to be is they're supposed to be the fair referee that keeps. I mean, I want a government, Danny. I definitely want a national government or a state government or a local government. The reason I want a government, I want two things. I want rule of law. I want police officers to catch bad people and put them in jail. And I want courts so that if people cheat or lie or steal, they go to jail or they get punished for that behavior. My guess is, if you looked at it, and I've had people look at it, that you could probably have those services out of your government for less than 10% of your income. And if they put a VAT tax on everybody, and maybe they could say, okay, we're going to put a VAT tax out there. We're not going to charge it on food and clothing because everyone needs that stuff. But you want to buy a nice car, you want to buy something big, you got to pay a 10% VAT tax on top. I bet that would pay for the government. And I don't think most Bitcoiners would have a problem for it. The issue is, what are you paying versus what are you getting? I mean, today, in my case, I'm probably paying 45. When I add up all the stuff, state, local, everything else, I'm probably 40 or 50% of my income. And Europe, it's worse, right? I mean, Stefan, you probably tell me in Italy, I bet it's even worse than that. So, what are you getting for that? I mean, I don't get it. How do they have a right to half of your productivity? That's
Larry,
the problem.
can I show you?
Yeah.
Can I show you something in a sec?
Sure. I love Milton Friedman.
Down.
Yeah. I mean, it's, if you go, I mean, it's interesting. Before the Civil War, the things that the government did, I mean, it was really pretty tightly prescribed. I mean, and Washington, D.C. was not a big, powerful place. I mean, if you look at what the Constitution says the federal government's supposed to do, it's not a lot. And their courts and commerce and tariffs and, the Treasury Department, so on and so forth. It's when they got into the business of war, and then when they got into all these other things that have just expanded over time, and it's become a problem.
Yeah, what happened in 1913 in England is absolutely astounding, and it was discovered like in the early 90s or something. When
is it the fact about they sold all the war bonds, that Keynes lied about the war bonds? No?
Yeah. That they pretended that people had bought the war bonds, but in fact, as you said, people are not interested into bombing people they don't know.
Yeah, they just lied. Yeah, I mean, people forget these history lessons. In the First World War, the price level doubled from 1915 to 1920, and that was all because of the money they had to print. And the Federal Reserve had just been formed, and of course, that's the first thing they did was violated their charter. They're supposed to only lend against good bills, and they didn't. They gave the banks a subsidy by issuing war bonds at 3.5%, letting the banks borrow money for 3%, and so the banks made the 0.5% spread, and it covered the debt. And by the way, that incidence of inflation created all kinds of trouble. I talk about this in the book. Ku Klux Klan lynchings went up. There were race riots all over the place. There were labor strikes everywhere because the price level had doubled. Charles Ponzi started his Ponzi scheme in 1919, right in the middle of that inflation. Very interesting parallel that Sam Bankman-Fried did his thing right in the middle of the COVID inflation, right? It's inflation really hurts societies. It kind of tears them apart. And, and then what happened is the progressives came along and they were like, okay, the reason all this stuff is happening is because you guys are drinking too much. So in 1920, they passed the Volstead Act and we had prohibition. And it was like, no, the reason all these things were happening was because of the money. But, okay, whatever. If you want to try and get people to not drink, I mean, I get it. So
now it's greedy businessmen.
Yeah, exactly. It was a greedy businessman. That's what the left will tell you.
What do you think about the possibility of a change in status in how Bitcoin is categorized by the government? Like, do you see the capital gains tax going away at some point, or a change in management, or what do you think?
Yeah, boy, I sure hope so. And Trump mentioned that once. One of his sons was in favor of it. I mean, and the book calls for this. There's a chapter in the book called Policy Responses, and I call for it. I think first of all, we should have every form of money should be legal tender and shouldn't be taxed. So what I would say is Bitcoin, gold, silver, and the dollar should all be made legal tender. And that means that if they go up and down in value versus one another, no taxes are due. Do I think that's likely? I don't know. Not short term. I think longer term it's likely, because I think longer term Bitcoiners are going to be very rich, and rich people tend to want to get involved in the government. So, and then they're going to change the rules. And frankly, that's as it should be. I mean, the notion, like, if I buy gold and I use it to protect against the government debasing my currency and printing a ton of money, and so I buy gold at $35 an ounce and it goes to $3,000 an ounce, and I've got a huge gain. I mean, I didn't really gain anything. I just preserved my purchasing power. For me to have to pay the government a tax on that gain, that's just not right. All I did was I just bet on a better form of money than their money. And so, Bitcoin is a better form of money than the dollar. We shouldn't have to pay tax on the fact that we're smart enough to buy it. So, and I think we'll get there, Danny, but sadly, even though Trump kind of mentioned it, you know what I could see him doing actually? I think because they've got an accounting nightmare, right? So I bought a lot of Bitcoin cheap and I put it on my, my Lightning wallet. And I go to Bitcoin shows and I buy, a Coke or, I buy a sandwich or something and buy a t-shirt and I use sats to do it. Right. And so I just, that's, oops, Danny, you there? Your video went away. But I use sats to do it. I mean, I just created a taxable event, right? Because I bought my first Bitcoin I bought for $400. And, am I going to report it? No. Are they going to figure it out? No. It's just, I mean, they've got a nightmare on there. It's impossible. So I think probably the first step, I think what they'll do is they'll say all Bitcoin transactions under $600 or under some threshold are not taxable, right? I mean, that makes perfect sense because they can't, as a practical matter, they can't keep track of it anyway. But, when you have Bitcoin at a brokerage firm and it goes up a lot in value and you sell it, well, then you're going to get a 1099 and the government's going to come and say, where are our taxes? And I know there have been cases of people who did not pay those taxes and, they want to throw them in jail. But I think that'll change over time.
Well, yeah, hopefully, because it's impractical. And I think that's the objective, is to make it impractical, but it's also unenforceable. So yeah, hopefully it evolves.
Exactly.
Do you see a situation in which there is Bitcoin-backed cash or some version of like where cash continues to exist?
Well, yeah, I mean, like Sailor, I think there'll be parallel systems for a while, and I don't think the dollar is going to die overnight. And until layer 2 and Lightning or the alternative to Lightning. I mean, I'm not 100% sure Lightning will be layer 2. It's come a long ways, but it still has issues. But I think what will happen is first we're going to have a hybrid system where everybody's going to know that it's smart to instantly convert back to Bitcoin for your savings. But the dollar is still the means of payment for a lot of things, and so they'll probably run in parallel for some period of time. But I also believe that over a longer period of time, there could come a moment where everybody's like, I just plain don't want dollars, and I noticed everyone's accepting sats, and so the dollar will go away. I do believe that'll happen. I think my grandkids won't even know what a dollar is. It'll be a historical artifact. And, they will price things in sats. How many sats does that car cost or does that hamburger cost? That's where I think we're headed. But I mean, I literally do say my grandkids, so I'm talking 20, 30 years from now. This is a ways out.
This could be a reality 3 months from now when Maya Farbu wins in Suriname. That she said
well, that's right. Yeah. I hope she does.
She would denominate everything in sats.
Is that right?
I mean, wow. Yeah. She's quite radical on that.
Wow. Yeah. I love her. She's great. Does she have a chance of winning? I hope she does. But
I think she does. Yes. I mean, it's difficult because we know that it's a country that's suffering, has been suffering from corruption a lot, and.
Right. Yeah, no, those countries are tough.
The pressure is strong, but the population is very young and very fed up. So she has a shot also because she pushes things very much bottom up with a good example and with nice initiatives for the people and so forth. They recognize her work, and she's very dedicated, and she's a real Bitcoiner. It's really nice.
Yeah, I know her. I've met her. She's great. I like her a lot.
I took a quote from your book that said, paper money, like Voltaire says, paper money eventually returns to its intrinsic value, zero.
Voltaire.
We're going there, but over what time frame? I mean, I thought it would happen in 2008, and here we are 16 years later. So, the slope of the curve is always a little difficult to predict. I feel like it's going to happen in the next 10 years. I feel like we're, Bitcoin has broken out of it was a really small group of us who were kind of cultish into this is an asset class. I mean, there are very few people who don't know what Bitcoin is now. And a lot of my normie friends are asking me about Bitcoin. And, the ETFs, I think, were just an enormous, enormous game changer. I mean, when they suddenly, and to be honest with you, I was kind of surprised they got it through. I mean, it told me that Larry Fink had a lot of drag. But, the ETFs allowing the average average advisor to let people buy Bitcoin in their stock brokerage account, that's huge. It's just really huge. Now, I'm not a big fan of them because they're not, you don't own your coins if the ETF holds them for you. But as an entryway drug into the Bitcoin ecosystem, you do get the price appreciation as long as they don't get taken away from you. And it's woken a lot of people up.
I have a lot of questions, but I think I want to ask one that I think a lot of people are emotionally connected to, which is that like growing up, I think, like you were saying, we don't naturally want to hurt other people. We want the well-being for other people. We understand that our neighbor has to live well for us to live well, which is kind of communist ideas. So what do we do with all that altruism and all that well-being that we want for all of us, like shared well-being? How do we like channel that in capitalism? Like, because I still feel that capitalism is not going to throw away that feeling and that need that we have to be altruistic and to have like our society be healthy all around. So what do we do with these feelings?
Well, so, in the older capitalist days, I mean, I think if we went back to, we're not really in a capitalist system right now. We've got a kind of a crony, broken capitalist system. But I think in a system where people aren't so worried about their financial situation because they feel like it's fair game and they know that their savings will protect them, I think those people are much more likely to be generous and charitable and concerned about the overall well-being of the society, versus a society where everybody's just, I mean, right now, I mean, the one thing about America that troubles me, I mean, because I remember it when I was much younger, America just feels like one large money grab. Do you know what I mean? It's just like everybody is just trying to get theirs because frankly, it's tough. I mean, the economy is tough. And so, and when you're afraid of not, making it and and everything else, you see your area where you think you can grab money, you're going to try and grab money, and to hell with the other guy, and so, this is fiat behavior. I mean, I think, in the Belle Epoque back in the, late 1800s in Europe, I mean, there was a much greater share of kind of charity and general, I think, concern overall for the well-being of all people. And so I think it's much more easy for people to care about others and be a part of a positive society when they know that their own situation is not desperate. You know what I mean?
Yeah, I think that the shameless money grab from the top, from the politicians, and on one side of the spectrum, the gambling, like with meme coins that we see at the moment, are really symptoms of the fact that we are on the cusp, I think, of hyperinflation.
I agree. I totally agree with you. I completely agree.
It's just
I think hyperinflation is a much higher
desperation from the poor and the feeling that the game is about to finish from the politicians. So they just grab, and everybody knows it, and they know that everybody knows it, but they do it just the same.
Yeah, no, it's like the house is on fire, so you might as well loot it before you leave. I mean, that's how it feels. That's how it feels to me.
No, because I did have a question that was kind of on that note. Because in your book, you talk about how we could transition into a Bitcoin ecosystem. But obviously, the powers that be are not working towards that. They're probably working towards establishing a CBDC. What do you think do you think hyperinflation is going to be the tool used to introduce CBDCs? Or where do you think is the path to the dark side?
I don't think anybody wants hyperinflation, and I kind of hope we don't have hyperinflation because it's a pretty ugly event. I mean, I'd like to see us have higher inflation and everyone gets smart enough that they politically elect people who will take us to a reset and put us on a sound money standard. That's my preferred outcome. Okay. Having said that, knowing the way politics works and knowing the way history works, I think there's a decent chance that, people ignore the problem until it's too late. And as Stefan says, we get into a mass Gresham's law kind of event, and we do have a failure of the currency, and we do have hyperinflation. And that would then require a reset. And I'm guessing the government would say, we're going to reset with a CBDC. But if there are enough of us around and the internet's working, I think the balance of us are going to say, yeah, that's fine. We're not playing that game. You want to sell me, you want me to, you want to do transactions, I'm going to do them in silver coins. I'm going to do them in gold coins. I'm going to do them in sats because, I don't want your damn CBDC. It's not worth anything to me. That's so, if the currency fails, that will be the last kiss of death for the big centralized governments, because who's going to trust them after that? I mean, who's going to trust them? I mean, having said that, they would trust them if a new set of people came in. I mean, like take Weimar Germany. Okay. They had a hyperinflation event there. The currency completely failed, but, they threw out the guy who had done it. That whole government got thrown out. A new guy came in. He said, I'm backing this stuff with gold and land. And inflation just stopped. Dead ass stopped. and they built the economy back. Now, unfortunately, a lot of them got hurt so bad that they were pissed off enough that when Hitler came along, they thought, oh yeah, he's a good guy. He's going to make us great again. I've heard that before. And so they backed the wrong guy. And by the way, that's part of the whole problem. I mean, the book talks about this. You know, we've in my view, we've reached peak centralization. Centralization was really good when we were trying to make a lot of steel and a lot of cars, a lot of stuff really fast, because you got economies of scale from centralized capital, centralized production, centralized. It created a lot of wealth. Okay, that's the good news. The bad news is it created these enormous organizations that, you know, as an example, in World War II, figured out how to kill 40 million people in 6 years. And that's because one of the centralized entities decided they wanted to take over the world, and that was Hitler. So a madman got in control of a centralized entity. I think what's going on now, what we're seeing is that all of these centralized entities, they're sclerotic, they don't work, they're not responsive to the people, they lie, they're corrupt, they benefit the insiders. And whether this be big oil, big, you know, military, big food, big whatever, big stuff is not working. We've got a huge trend towards, you know, big media, which lied to us constantly for years and years, right? Yeah, and so now, thank God the microprocessor came along because it created this trend toward decentralization. The internet was really the first thing. So now I've got guys like you who can give me the news instead of CNN, you know, or Tucker or Joe Rogan or whatever. And so decentralization, and people are smart. I mean, you know, if you pee on their leg and say it's raining, you know, they figure it out. They say, no, it's not. You're peeing on my leg. And so, you know, people are smart. And so, you know, we've now got the tools with which these big organizations are going to get dismantled. So I'm not even sure there'll be a United States in 20 years. There might be, you know, it might be more like Switzerland with a federation of regions because, you know, frankly, you know, the people down south don't want to deal with the people in Massachusetts because they're all liberal. I mean, who knows? But I mean, things are going to change, and we are going to have, in my opinion, this trend towards decentralization is going to continue for many, many years.
So you heard it first, guys. So
go ahead.
You heard it first. The news come from Bitfluencers, from Joe Rogan, and from.
It's true. It's really true. I mean, you guys have more credibility than CNN. I'll tell you that, right?
Yeah, probably.
That's a pretty low bar, though, Danny. I mean, you know, it doesn't take.
Thanks to our host.
A quote from your book, which was, "Sound money challenges the centralized power structures that have historically eroded wealth and personal autonomy."
Yes.
I had to write that down because that was lovely.
It's a great line. Yeah, it's true. It's true. I mean, look, you know, the book, again, the book tries to explain why a small group of people have screwed us. No, it's true. So, you know, I mean, the wealth inequality here, it's like French Revolution kind of stuff. I even said that in the book. 1% of the United States controls 92% of the wealth. I mean, that's just so screwed up, you know, and the reason they've done it is because it's like they've tilted the game board. They've got a rigged deck that they're playing with, and it's like heads they win, tails we lose. And so, but the thing is, here's the thing. There are millions of us, and there are a smaller number of them, and they've got control of these levers of power, these decentralized machines or centralized machines that they've run. But guess what? We're ripping that shit up. I mean, we're coming in with a Bitcoin sledgehammer, and we're just, you know, we're beating the crap out of it, right? And so,
peacefully.
Yeah, right. Yeah, basically. And so basically what we're going to be able to do is replace them. We outnumber them badly, and we've got a better solution, and people are going to migrate to it. It's just that simple, you know?
We're going to run out of time soon. So
okay,
I'm going to get more questions.
We can go over. I told you I might have a stop coming up, but it hasn't happened yet. So.
Wonderful. So I actually had written down the 1% population, 92% wealth metric, because I thought it was important to bring it up in this program, because sometimes we forget about these crazy metrics that are out there. But what I wanted to ask you about is about Bitcoin economics, and now focus on like the economics within Bitcoin. And recently there's been a tendency towards miner centralization. And my question to you is, do you think Bitcoin can change the world solely on the premise of having a fixed supply? Or do you think that miner centralization is a core issue that we need to address?
I think it is a core issue. Bob Burnett's a very good friend of mine. As you saw, he wrote one of the reviews up in the front of the book, and he's very much in this camp, in your camp. And he makes a very interesting observation. He says, look, in Bitcoin, there are two things that are scarce. One is the coins. There are only 21 million of them. The other is the block space.
Yes.
There's only a block every 10 minutes, and the block is only 4,000 transactions. and yes, I think it is important that we have decentralization within the mining network, and I think that will come over time. And I think that we can't see and know how it's all going to evolve. I mean, as you obviously know, and I know, the block reward isn't going to necessarily be the important form of payment in the future. It's going to be the fees, because the block reward continues to go down, even if the value of the coins goes up. And so, and I think what you're going to see is you might also start to see bidding on block space, so that if you're a miner, you could sell your capacity to a certain amount of guaranteed block space, because you mathematically know what percentage of the hash you have and what you're likely to get. And so people will be bidding up, on those fees. So, that's a whole transition that we've yet to cross, and it's out in the future. But and I don't like the centralization that currently exists in the mining pools. But I think over time it will, I don't know, I'm not 100% sure of this. Bob and I differ on this, but I think over time it will probably dissipate. One reason I think it'll dissipate is that as you know, the major cost input for mining is energy. And we're going to get to the point where, I mean, we're going to be scraping the bottom of the barrel, getting 1% in terms of energy. And that's, really, really, really distributed. In other words, you're going to have hydropower out in the middle of nowhere. I mean, right now, 8 or 9% energy, you can't do it. It's not economic. 5 or 6, 7, it's borderline economic. You got to be in the 3s and 4s as a miner to make decent money. I'm talking about cents per kilowatt hour. And I could foresee a day when it's going to get down. You're going to have to be down under a penny or half a penny. And the only way you can do that is if you have a waterfall out in the middle of nowhere that you can put a hydro plant on and so forth. And there are only so many of those. And so each one's going to go back up to the satellite and do the mining operation. And I guess the point is that they're going to be pretty well distributed around. I mean, you're not going to have these enormous server farms because they're not going to have the low enough cost energy. So I think there's a counterbalance, Danny, to the risk you've described.
Yeah, and there is a difference between a worthy distinction between miner pool centralization and energy centralization. Like, as long as the energy is decentralized, the fact that the pools are together is not so concerning. That said, one of the reasons that Bitcoin mining is becoming centralized is because they discovered something called selfish mining that skewed the incentives of mining. Because originally the design was that there is no gain of being in a group rather than being on your own. But the reality is that there is an incentive to being in a group. If you have more than 30% of the hashing power, you can gain an edge by not disclosing your blocks until you have 2, and then you get 2 in a row, which gives you, so there is like an edge to being in a group. But like what you're saying about the cost of energy, I think does mitigate, or kind of can help mitigate that issue.
Yeah. It's an area that's not my area of expertise. I rely on Bob Burnett a lot for it, but it's certainly an interesting area. But I don't worry about it, because I tend to think that the system as currently constructed will solve future problems over time. There's just been so much capital invested in it, and everybody who's in it now has all the right incentives. The incentives are very much aligned. I mean, that's the other thing about it that I think is so important. It's just that it's a fair system with aligned incentives.
What you said about the fees is really interesting, because that was one of my questions for you is, do you think that the fees will be enough to incentivize people to secure?
Well, they'll have to be.
Eventually.
They'll have to be. But as Saifedean has said, I mean, we could get to the point, this is way out. I mean, I think the average on-chain transaction fee is in the $2 to $4 range now. Way out, we get to the point where, an on-chain transaction could cost $1,000 or $10,000. But, if you're moving $1 billion worth of value, or $500 million, I mean, base layer transactions would be the kind of thing that would be made from central bank to central bank, or major U.S. bank to another major U.S. bank. I mean, in other words, you and I would not be doing a base layer transaction, and there'll be days when it's like, you mean you transacted on the base layer? What, are you kidding me? Right? Nobody transacts on the base layer anymore, except for the really, really big guys. But that's, again, this all depends upon the correct development of layer 2, and so, I mean, the need for transactions in the world is not going to go down. I mean, the credit card companies process 28,000 transactions a second. So, there are plenty of transactions. We're going to need more. But and crypto, by the way, is very good at doing that. Just basic crypto without the security protocols of Bitcoin. It's very good. I mean, it can process that stuff. The issue is keeping that crypto honest by settling back to the chain, so that that it's real.
Do you think that custody is essential for Bitcoin to change our lives? Or do you think that even if we went a little bit custodial, Bitcoin could still change the world because of its fixed supply?
I think, well, so my view is if governments don't misbehave, we can have a custodial world and it's fine. I don't think it's ideal, and I also think in order to prevent some of the paper and the the derivatives around it, I think it's very important that the big custodians actually are willing to disclose and show proof of reserves, so that we don't get into a spoofing and paper Bitcoin world. But personal custody, I think, is really an issue of how much do you think, how benign or malignant do you think the governments are going to be? I mean, if they want to try and grab it the way they did gold, well, you're going to really be glad you have your 12 words and you have it on in a cold storage, because they can. I mean, one thing is for sure, if the government says this, I've said this before in other podcasts. Right now, Team Red is in charge, and they're Bitcoin friendly, right? They helped elect Trump, and it's all good, and they're supporting it. So I'm not too worried about what's going on now. Well, let's say Team Red doesn't do a great job, and in 4 years or 8 years, Team Blue wins, and we got a lot of inflation, and Bitcoiners are making a ton of money, and gold people are making a ton of money, and Team Blue is very jealous and very angry, and they say, "Screw that! These guys are ruining our fiat currency stuff. This really pisses me off. We need to tax that shit at 90%. We need to grab it the way Roosevelt did. Fidelity and BlackRock, send us that Bitcoin and cash out your customers for cash." Right? And I'll tell you what, Fidelity and BlackRock, they'll do it. I mean, they're not going to break the law. They're going to do what they're told to do. And so you're gonna one day be owning some Bitcoin that you thought was worth X dollars, and they're going to say, "Here are your dollars." And of course, when they take that act, the Bitcoin's value is going to soar because everyone's going to realize what just happened. And so, you're going to lose your Bitcoin, so to speak. Now, if you have your 12 words, your government says we're going to tax it 90%, or you got to send it in, or risk going to jail. Well, then you've got an interesting problem. You've got to decide what you're going to do about that. If you're going to comply with it, if you're going to not, if you're going to say you lost it in a boating accident. In my case, what I'm going to do, Stefan, is I'm living with you. I'm going to become an Italian citizen. So, unless Italy goes the wrong way, because I'm not going to let my government grab my Bitcoin.
Well, I am satisfied. I mean, I could still keep on talking about so many subjects, but I am going to let Stefan take the stage at this point.
Yeah, I had a little question for you, Larry. Do you want to spend a word about the hack of your X account?
Yeah, sure, I will. And there's some good stuff on Nostr about it. I'm not on X anymore, so I would have posted it there. But so I'm out of X right now. I got hacked, even though I had 2FA, and my phone was not compromised, my email was not compromised. Those were the 2FA sources. So in theory, for anyone to get into my account, they should have had to go through an approval out of those two sources. They didn't. I just got an email that said to me, your 2FA has been disabled. Apparently the scheme that's going on, and I was hacked by somebody pretending to be a Bloomberg reporter, and
okay.
The Bloomberg reporter said, "Please pick a time to talk with us and use this Calendly app." And I did. And then when I used the Calendly app, I used a Zoom call with them, and they wanted me to screen share, which I probably shouldn't have done. And we can't quite figure out where it occurred. There's a lot of this going around. But what I would say to people is, if people you don't know are asking you to either use Calendly or Google or your Google Calendar and let people into your Google, there's some permission that they can get to get into your Google Calendar. So there are three potential apps. I don't know exactly how it happened, but I do know this. Zoom, Calendly, and Google Calendar all might have a backdoor. And so if you are getting invited to something on any of those three platforms, and you don't know who it is, and by the way, they've gotten good at spoofing the emails. I mean, I Googled the guy. This was a real person at Bloomberg, and this was his real email. I mean, it wasn't, but they made it look like it was, okay? But if you're using these three apps, and they ask you to do something, either schedule something or whatever, answer some questions. I mean, you can end up inadvertently, and depending upon how your apps are set in terms of their security and what they can share and what they can't share, they can inadvertently get into your computer. And, they told me that what they did was they mirrored my cookies, and they took those, and then they were able with those to just get into my X account and just completely change it. So, and it's quite sophisticated. It's happened to a lot of people. I've had a couple of friends it's happened to. If you actually get on, if you're on Nostr, which I'm on now, which I highly recommend, by the way, everyone, you guys have Nostr accounts yet? You should have Nostr. Go to my Nostr account.
I'm following you and
Yeah,
everything.
I retweeted on Nostr. A guy did a really good Twitter thread, which of course I can't access now because I'm not on Twitter, but on what this is all about. And he said, look, this is very sophisticated. Here's how they're doing it. Here's how you protect yourself. So I highly recommend that everybody take the time and be very, very vigilant about who you schedule calendar events with, because Calendly, Google Calendar, and Zoom all have some access to your calendar, and there appears to be some kind of a backdoor. And that's all I can say, because I'm not a techie, so I don't really know exactly how they did it. But
just one thing about the screen share. Did you just share the screen, or did you also
Well, I might have had no, I didn't give them any passwords, but I might have had the setting and screen share in the past with my partners. We've also had it set so that we're able to share files. And so so with all of these apps, there are settings that you have behind them. You've allowed or not allowed certain things to happen. And I don't even know what those things are. Okay, this shows you how technically, illiterate I am. But apparently, if those settings are not correct, then that gives them the entry into what they need to get. So that's the warning. And like I say, the Nostr thing that I tweeted had a lot of information on it, and I'm in the process of kind of hiring a security guy who's going to help me figure out how to get all this really squared away. Because by the way, just historically, people remember me for a while. About a year ago, I was SIM swapped, and somebody stole my Twitter account. They actually got my Gmail account too, and that was a real mess. And so the solution to that was I got Efani, EFANI. I don't know if you're familiar with that, but that's a service that basically has never been SIM swapped. It's $1,000 a year, but it's worth it to me. And so I use Efani. So here I am. So, in general, most of us think 2FA, okay. If they've got to come through Authy or Google Authenticator, if they've got to come through your phone, or they've got to come through your email, and we've all accessed different sites like your brokerage firm or your bank or whatever, and they check you, and it works pretty well, right? And so I had the same thing set up on Twitter, and apparently, and maybe it's a Twitter issue, I don't know, but apparently there's something, they overrode it. They somehow got around it. So that's the full extent of what I know. But the warning, I think, is be extremely careful who you schedule with, because, on Zoom, on Calendly, on Google Calendar, because
basically everything is good for Bitcoin and everything is good for Nostr.
Yeah, well, that's right. Yeah, I love Nostr, and I'm going to be using it a whole lot more. I mean, I'd like to get my Google or my Twitter account back, because I have all these DMs in there that I really need, related to the book. I mean, this happened at a rather inconvenient time for me, because I'm trying to launch and sell a book. And Elon, in his, he's got a Department of Government Efficiency inside of Twitter. He fired everybody. So the customer support is very backed up.
So how are the sales of the book doing?
They're going pretty well. I'm not going to cite specific numbers, but I've been kind of told they're lights out compared to books at this early stage. So, you've got to get to 50,000 books to be a New York Times bestseller. And, if I extrapolate this out, I'll get there eventually. I don't know. We'll see. I mean, it's in paperback, it's in Kindle, it's in hardcover. Walker America is a good friend of mine. He is actually reading the Audible version, and that'll be out. That'll help a lot. I've had a lot of people ask about the Audible, and it should be out soon. So yeah, no, it's going pretty well. I mean, I don't know. I'll be curious once you guys finish reading it to tell me what you think of it. I mean, I think it's a really good tool for orange pilling people, and that's why I wrote it.
Yeah, I haven't read it yet.
Yeah,
but I will.
Yeah, and if you can give me anyone give me a great review, appreciate that. I mean, look, the way we're going to fix the world, the way we're fix the money, fix the world. The way we're going to fix the world is one convert at a time. If we get, it is true. If we get the entire world to realize that we're right and that this is the solution, it's going to happen. It's just, and that's going to happen no matter what, because it's obvious. So we're going there either way. Just because we all have limited lifespans, I'd prefer to go there sooner rather than later. And so that's why I wrote the book, right? And so if you read the book and you like it, and you think, oh, this is good, the thing you can do that I think is really high value added is just spread the word. give it to a friend, tell somebody about it, recommend it, because if we can convert enough people, then it'll happen sooner. And that's the goal.
I have a friend who's kind of the same age as you, and he helps me deal with the horses that I have here on my property. And every day I see him, like once a week, he's like, Daniela, this is not the America that I grew up in. You don't understand. And so like when I was starting to read your book, I was like, I am going to have to give my friend a copy of this. So he can understand.
I mean, I got to tell you, the 60s and 70s and 80s in America were so much better than they are today. Oh my God. It's just, I don't recognize this country anymore. I really don't. It's horrible by comparison. And that's not entirely fair because technologically it's a whole lot better. I mean, we're talking to each other across country. We've got, all the technology is 10,000% better. It's really improved lives. I get all of that. But there's a middle class and people are chill and everyone's friendly and it's not a money grab and there's just a lot more kindness and all that. I mean, it's so much better back then. I mean, this economic situation, when you're backed up against the wall economically, it's hard to be happy. It's hard to be generous. It's hard to be nice to people. I mean, and this is why, go look at the political arena in America today. I mean, it's ugly. It's really, really ugly. And it doesn't have to be that way, So
beautiful. Wonderful.
Well,
so the best way for people to support you is to go and get the book.
Yeah, please buy the book.
Okay, wonderful.
Yeah, and spread the word, really. That's the message. I mean, we're all Bitcoiners, and we can see it. We know it's a better solution, and it's hard. And I get a lot of pushback, and unless somebody's just absolutely nasty and aggressively negative, even if they're skeptical, I totally get it. And I just keep working on them, and I can't tell you how many people they eventually come around. It's just everyone's going to get it eventually. And to protect your family, to protect your friends, I think it's really incumbent upon people to look out for the people they care about and make them aware.
Yeah, because
right?
A seller says is based on need. So once you need it,
that's right.
You more easily see it. But our
and I
job is
think that's right.
basically
And that's
to
why,
expose.
Yeah, the average blue collar guy the average blue collar person gets it a lot more quickly than I gave a presentation. I live in Florida. I live in a well-to-do area of Florida. And I gave a presentation to a men's club, about 200 men, most of whom were my age. A lot of them are older. And every single person in the room has done extraordinarily well. They're all, by definition, to be in this club, they're in pretty good shape. And they didn't react really well to it. They didn't really like it. And the reason is the world's worked pretty well for them. That they're not feeling a whole lot of pain, and they think they're pretty damn smart. And they've kind of won in the fiat world, and they're driving convertible Bentleys, and they don't want somebody coming in and messing with their punch bowl. And I said, look, this isn't it's not a class thing. I'm just trying to explain to you that things are changing, and you should consider what the implications for this. And a few of them were receptive to it, but many of them weren't because as you say, Stefan, they're not feeling any pain. I mean, the system works really great for them.
So it's the middle class basically that is complaining a lot, but they don't know that the solution is here.
Well, that's who I'm aiming the book at. But these people have won at the fiat game, and if you've won at the fiat game, in fact, if you're a Jamie Dimon, this thing threatens your privilege, and you're like, you hate it, right? Or if you're a Warren Buffett, you hate it. Or if you're Bill Gates, you hate it. It threatens what they've got, and
everybody is an authorized participant.
That's exactly. I love that. That's a great line. Everyone's an authorized participant. Yeah. Well, and that's. I mean, as we all know, the premise of America was fairness. Equality. All men are created equal, right? And women too. But the founders wrote it from a male point of view. All people are created equal, and the system we have, the financial system we have, that's not a true statement. It's just not. I mean, you're not equal. Bill Ackman is not equal to me. Bill Ackman can borrow at the Fed funds rate. He can convince them to bail out Silicon Valley Bank because he's got big deposits there. He can, all of, just the people who run the system and are benefiting from the system and are rich in the system, they take advantage of the system. And we got to fix that. But we're gonna, Satoshi gave us a wonderful tool. And, there's really nothing they can do to stop it, which is, that in and of itself is beauty. So,
thank you, Satoshi.
I'm really good friends with Marty Bent, and I just love it because every time I, talk to me, he always finishes the conversation with, "We're going to win," It's like if I ever say, yeah, Marty, this is hard, he says, shut up, we're going to win. It's just like, it's over. I mean, and it's true. We are going to win. But,
yeah, and the beauty is that we are going to win peacefully.
Well,
We
that's
don't
right.
even need to
Absolutely. Yeah,
throw
no, it's not a
bricks
war.
or things like that.
Yeah, no, it's not a war. Yeah, so that is the beauty. So everything about it is really, really positive. So thank you so much for having me on the show. It was very nice to speak to you. I think Stefan, I think I've interacted with you both on Twitter and on Noster. Danny, I don't know if we'd ever interacted before.
We said hello very quickly in Madeira back in March.
Oh, that's
you
right.
Were outside
I do remember
of the
that.
entrance.
Yeah.
And we you were talking to a bunch of people. I just interrupted the conversation.
I remember that quite well. To say hello. Yeah, I knew you looked familiar.
And you're pretty tall. Huh? Did you notice that the most surprising thing in conferences is the size of people?
Oh yeah. Well, have you interacted with or met this guy Robin Sayer? He's relatively new as a podcaster. SEYR. I interacted with him a lot. Got to be.
Robin is massive.
He's a monster. He's like 6'7". I ran into him in Abu Dhabi. He's like, "Hi, I'm Robin." I was like, "Oh my God, you're a basketball player." He's a really, and I'm 6'3". I mean, he's a very tall guy.
Like Bram Kanstein also.
Oh, is he? I haven't met Bram yet. Is he really tall?
Yeah, he's like 193 or something.
Oh,
I don't know what that is.
And Jimmy Song.
Yeah, no, I've met Jimmy. Yeah, he's a lot bigger than you think. Yeah. Well, some people are a little smaller than you think too. There are people who are shorter than you think.
So, do you think the CrossFit will make you bigger?
Oh, I don't know. It'll build your muscles. It'll keep you in shape. No, I mean, my height hasn't really changed much, but staying fit's an important part. I think it's interesting, that if you look around the Bitcoin community, how many, generally speaking, good habits a lot of Bitcoiners have. I mean, they're kind of obsessed with their health. A lot of them are obsessed with working out or lifting weights. A lot of them want to eat right and they want to eat meat. There are a number of us who are dry. I mean, I haven't drank for 35 years, and a lot of people are that way. Max is dry. A ton of people are dry. And so, I mean, look, we want to get the most out of life for as long as we possibly can. Bitcoin's a tool for doing that, but all these other things are proof of work as well. You treat yourself right and you're going to get you're going to have a long, healthy life where you can do things in your 70s, 80s, and 90s. And, a lot of my peers haven't taken care of themselves, and it shows.
So did Bitcoin have an impact in you starting CrossFit? It
did, kind of indirectly though. I was doing Bitcoin at that time. Probably more. This is in the book. You haven't read it yet. You'll get to it. There's a part in the book where I talk, and by the way, I show a lot of warts in the book. I mean, I show my positives and my negatives. There was a time when I was in the gold trade from 2011 to 2015. I was just getting the shit kicked out of me. I mean, I was so wrong. I didn't understand what was going on. I knew monetary debasement was taking place, but the price of gold was going down. And I hadn't worked out or been athletic for a long time, and they were changing the rules on me again and all this stuff. And what I did was I dug really deep and I kind of got spiritual about it all. And I realized that I thought I wouldn't change my mind. I knew I was right about monetary debasement, but I knew I was also losing in the short run. And I realized that if I wanted to win, I was going to have to win in the longer run. It was going to take longer than I thought to win. And, so I was in my middle 50s and my body was starting to deteriorate. I mean, you just notice as you age, everything's not working as well. And I was like, God damn it. If I want to stick around and beat these guys, I got to get in shape. And so
is the gold bug in you that?
Yeah. So it was really the failure of gold in that time frame that forced me into, okay, I got to get in shape. So I'm a type A. So how do you get into extremely good shape? So I did that. So I studied about the Navy SEALs. So I went to this, ex-Navy SEAL training camp in California where this guy beat the shit out of me for a week. And he introduced me to CrossFit. And I was like, okay, if I'm going to get in shape, let's not do it halfway. Let's get into really good shape. And
so how many push-ups do you do?
Well, I can't do 100 unbroken like some of these guys. I have to do sets of 20, but I don't know. I mean, we do a lot over time. I mean, I'm 67, so my performance has gone downhill, but I'm there every day. So, this is like,
I see your lists.
Yeah. Consistency is very important in fitness in my view. I mean, this Younger Next Year book I read is a very good book. And I had a great CrossFit coach. He said one of my favorite lines. I'll never forget this. He said, "Look, Larry, this is really simple. You don't have to kill it every day, but you got to show up every day because there's no point in coming here on Sunday and there's no point in shaving 7 times on Sunday." And I just thought, isn't that a great line? Do you know what I mean? shaving 7 times on Sunday doesn't do you any good, because a lot of guys will think, well, I'm going to go in one day and just work like crazy in the gym for that one day. And he was like, no, you don't have to kill yourself every day, but you got to show
like
up.
Sweating once a day,
yes.
I think should be a very basic rule, because it's not,
well,
if you think about it,
you're doing something.
You look, your 9-5,
yeah.
it's very easy not to sweat even once in a day.
Oh, it is. Yeah.
And
no,
that's
it is.
Problem.
And frankly, that's one of the beauties of CrossFit. The workouts are short, but they're very intense. And what they figured out is that the intensity is what drives the growth in the hormone in the heart. Yeah. You don't need to go out and suffer for 3 hours, but you got to suffer pretty badly for 15 minutes. And you get the same benefit from the 15 minutes that you do versus the 3 hours. So anyway, it's fun for me, and I highly recommend it. I mean, you guys are both younger. I mean, I think you'll notice in your 50s you got to start doing something, because if you don't, at 60, 70, or 80, your body's not. It's going to let you down. You're just not going to feel great. But if
do you know what happened to me today, Larry?
Yeah.
So basically, I went skiing.
Yeah.
Because in Italy, everywhere you are 1 hour away from the sea and 1 hour away from the mountain. Yeah. So I drove 1 hour with my wife and one of my kids to ski, but everything was closed.
No.
So I had to walk all the way up just to ski.
Yeah, good for you.
Yeah.
Well, good for you.
It was very nice.
That's good exercise.
And it created like a kind of a private joke with the Swiss hodler, who is a cross skiing ex-champion. And he says, downhill skiing is Fiat stuff because you go uphill with the machine,
Yeah.
So I showed it to him that downhill can also be proof of work stuff.
Walking up to come off piste, that's serious work. I've done that. Yeah, no, it's good for you. That's great. Every day, something like that. Anyway, I do have to run, guys, but I've enjoyed it very much.
Yeah, thank you very much, Larry.
We'll be in touch.
It was great, really.
It's been a great privilege to have you on the show and to pick your brain and to have the opportunity to ask you all these questions. It's been super wonderful. Thank you for coming.
Thanks, Danny. Look forward to meeting you guys. See ya.
To our audience, don't forget to like, share, subscribe, leave us a comment with your questions, and we'll see you soon. Bye.
Adios.